This is the closest I've seen to silver squeeze my whole career.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and excited to have Andy Schectman back on the show today because obviously it's been an eventful last couple of days with some banks going down and I think some renewed concern about the structural dynamics of the financial system, especially in the banking sector. Certainly, as we've talked a lot about on the show over the past couple months, or past year now, where we've had the Fed raising interest rates, a lot of people, myself included, suggesting that they would raise rates until something has broken, and something broke. And interesting times. We did have a rally in the gold and silver markets on Monday, so here it's been quite eventful. And to check in and give us some insight into what's been going on is Andy Schectman of Miles Franklin. So with all of that long intro said, Andy, how are you today?
Good to see you, brother. And this is what I mean, Chris, when I say to you last week that you are the news. Guys like you are the media. And people should understand that, people have been listening to you and me and others out here who've been saying this stuff, hopefully have prepared, whereas most people have no idea. I did a Zoom call with a bunch of people who are I guess you call them accredited, sophisticated investors, and most of them didn't even know what a bail-in is. They found out last night, obviously, or they started to hear about it. But my point is that the service that you're providing is really important. You're showing people what's happening, and you're talking about it months in advance. And I think this is just beginning. I really, truly do. And anyways, it's good to be here. It's good to see you again. My head feels like it's a Nerf ball. I feel like I've batted it against the wall all day. This is the closest I've seen to silver squeeze my whole career. They say that we're motivated in two ways in this world. We're motivated by greed, and that's been really the mantra of the past, 2 decades, at least the last decade, where low interest rates and easy money have stimulated the economies and created an amazing environment for traditional investments. But everything good comes to an end. And I think that is what we are seeing right now. Just as bullish as easy money and lower interest rates were for the economy and the markets, it will be equally and maybe even exponentially more bearish in an environment where credit is being reined in and rates are rising. And you can see this right now, because the reason it might be exponentially more is these banks have loaded up on assets at super low interest rates over the last several years. And when you see a rush of depositors out the door, like we saw here with the Silicon Valley Bank, they have to sell their assets. And those bonds they were buying at 2 and 3% are now being sold at 4 and 5%. They've lost over half their value. They're getting eviscerated. And like we saw last night, in one night, one of these banks can go upside down. And what the Fed has done by saying we'll backstop all this shit is ridiculous. They're signaling hyperinflation. And I think people out there are now concerned, and fear is taking over where greed left off. And I've never seen anything quite like it, truly. Whereas silver squeeze was a whole bunch of new people jumping in the silver ride, what you're seeing right now is people grasping for whatever silver and gold that they can buy, because they don't want to leave their money in a banking system that is woefully undercapitalized, hugely over-leveraged, and completely and totally uncertain as to where we're going. Chris, this is the craziest thing I've ever seen.
Well, fortunately, Joe Biden did say that everything is okay and we're on sound footing, so there is that. But I think it's, at least to me, and I think to a lot of other people, surprising just at how quickly the thing unfolded here, and just a matter of days, losing a couple $100 in the share price as well. So I think that perhaps rightfully has people a bit concerned. And again, we're recording on Monday afternoon. This will be posted on Tuesday. But what were people saying? I hear all of the bullion dealers were getting a lot of calls today and even yesterday. And I'm curious what people were actually saying as they called in.
I want my money out of the bank. How quickly can this happen? I mean, we're talking millions and millions and millions of dollars, where, people are calling in and leaving messages. I want to spend $2 million. I want to spend. That's not what normally happens, right? And so fear, anxiety, complete and total anxiety. You can feel it. It's palpable. Whereas during Silver Squeeze, it was about, I need to capitalize on this. It's going to go to the moon, just like AMC and GameStop. We're going to make a ton of money. It was different. It was chaotic. It was frenzied. And it was a lot of people, most of which were, decent size orders. Some were really small. Some were okay. This is people saying, I want to empty my bank account. I do not want my money at all in the banking system. I was taking orders till 1:30 in the morning last night on Sunday night. I'm getting calls from the West Coast from people saying, oh, I didn't think you'd answer. I mean, I did. I was there doing paperwork and talking to people. And I've waited a career for an environment just like this. And I've been talking about this for the last 3 months, ever since the FDIC meeting in November. People are terrified, Chris, and honest to God, they are, and rightfully so. And you know what? I am too. I'm concerned. And when you listen to a cumulative amount of anxiety and fear over the last 24 hours that I have, I mean, it starts to drip off of you. And I feel this. I feel like I'm wearing everyone's anxiety, and it's unlike anything I've ever experienced. And one of the things that I want to say is that for me, gold and silver have been wealth my whole career, my whole adult life. That was the way I learned this business. Gold and silver are wealth, have been for 5,000 years. Kings, queens, emperors, pharaohs, through every pandemic, through 2 world wars, through German hyperinflation, through the Great Depression, it's been wealth. And that's what it means to me. And I rue the fact that I have to talk about this in the light of, you better do it to save your ass. And that's kind of the way people are reacting right now. They feel that way. And I understand it. You know what? I've done the same thing. I've been buying it myself because I don't want my money in the banking system either. And I don't want all this money in dollars when we are being told that, oh, don't worry, everything is okay. Look the other way. I mean, what are the banks going to do? Are they going to save the dollar, or are they going to save the banks? And I don't know. I think this is a situation where when the government tells us that everything is okay, and don't worry, we're going to take care of it, that's when I think we should all be the most concerned. And they've been wrong, right? They've been wrong since day one. And they told, and when was the last time that the Fed and the Treasury and the FDIC met on a Sunday evening, followed up by the president saying, don't worry, as you said? Look, they've lost all credibility. There was going to be no inflation, and then it was transitory, and then, we're going to stop inflation, and then inflation reemerged. It's all crap. And they're scared. And the time to be scared is when they tell us, don't worry, we've got everything covered. I just think it's going to get a lot bigger than what's happened over the last few days. I truly do believe that.
Yeah, well, especially on Tuesday, you have the inflation report coming out, which by the time people are listening to this will have been released, and certainly is symptomatic of that dynamic that the Fed's been backed into, I don't know, maybe for 15 years now, where I don't know that there is a simple answer that solves all of this, because you either secure the depositors like they did over the weekend, or you let the banks fail. And we saw once again that they went for the securing the depositors approach, which again, I think I can understand people being frustrated with either decision, because it's, the damage I think was done a long time ago, and now it's at that point where we're facing the consequences of it. So,
well, and Chris, look, the FDIC can't handle this. They told us this in their meeting in November, but their insurance fund only has 0.03% of total deposits across the whole U.S. banking system. So 1 or 2 banks will drain it all. And the only way to save the depositors is to monetize the banks, to print currency, to make them solvent while destroying the value of the currency. And all that inflation is going to raise interest rates anyway, which will make more banks fail because they're loaded up with long-term assets with short-term, with small maturities. And it's just, it's going to feed on itself. And they haven't thought this through. And I think it's never been more important. And maybe this is why COMEX is being bled dry and the LBMA. Maybe the really smart people see this coming, just like the FDIC told us in November there will be bank runs and bail-ins. Of course, you know, there isn't a bail-in, even though the Dodd-Frank Act said that bailouts are illegal. But don't worry, it's not the taxpayer, right? They're just going to liquefy the banks with money they created out of thin air, and it's going to be more and more and more inflation, which just makes everything that you've been saying for all of these years that more relevant. And, you know, sometimes in life, you got to have strong fingertips. You got to hang on, and you got to hang on and trust your gut. And that goes for you too, not just all of us out there. You know, it's been tough to be you. It's been tough to be David Morgan. It's been tough to be me. It's been tough to be people who are saying this is what you need to do. And everyone says, well, why the hell hasn't it performed? Because this is a high stakes game, and you can see it by the actions that they're taking, bailing out one bank. Well, what happens when others start to? How about Credit Suisse that's circling down the drain? How about all of these other banks that are this close? You know, it's a crazy time, man. It truly is. And it's not about becoming wealthy buying silver. It's about exiting this chaos. And there isn't a better place on the planet to do it than silver. And I try to be objective. I really do try to poke holes in what the hell I'm talking about. And I would like someone to tell me what is more compelling than silver right now. It is undervalued. It is disappearing in nature. It is a depleting asset. It has expansive uses. It's being drained by the sophisticated investors. Why do we feel we have to beat people over the head and feel that we're, you know, talking our book or whatever it may be, when if you can't see what's coming down the pike, you are half asleep? And if this weekend didn't wake you up, and even more so, the ridiculous response by our administration, destroying the value of our dollar for our generation and future to come, well, then I think, you know, you should be listening to a different YouTube channel. And God bless you for hanging on and saying it like it is, and everyone else out there like you who has the courage to stand up and say, this is what's happening, this is what's coming. And I don't see a better place to put it than silver. And I don't see a better place to put it than silver. So that's kind of what's going on right now. You know, it's interesting. The premiums didn't rise over the last 2 days. And I will tell you, we probably did 1,000 orders in the last day and a half. I think they will rise. And I told my operations, buy everything that isn't nailed down. Everything. Go ahead. Go on our line of credit. Go as deep as you want. Buy it. And we're selling it as fast as we can buy it. And this is what I was talking about with you over the last few weeks is premiums have come down. Availability is great. And I kept saying, I don't see anything that's changed. It's a sweet spot. This is the best time to be buying it, period. And I believe that to be true. And I'll tell you one thing that's kind of interesting through all of this. The one thing that I'm hearing from most people, other than I'm scared shitless, get me out, is that I'm having a hard time getting a wire out of the bank. They're dicking me around. They're making it difficult for me. They're asking me questions. What am I going to do with it? People have been, I had one guy that wanted to spend $5.5 million that was stonewalled on Friday and couldn't do it till Monday. It cost him hundreds of thousands of dollars. So, you know, this is real, and where it goes from here, I guess, is anybody's guess. But I think this is that moment that could ignite this rally in metals that we've all realized is substantially long overdue.
Yeah, and in terms of some of the folks that you've mentioned, who, whether it was the last guy or the others that were cashing out what they had in the banking system, are most of these people who have been into the metals already? Are these people who are new to gold and silver? Or what could you say on that?
That's another great question. You see, you're an amazing interviewer, and that's something I'm glad you asked. Silver Squeeze was all these new people, young people, and not so young, but people that were capitalizing on profit. These people are the ones that have been in the game for a long time and said, see, I knew this was coming. And the majority of these orders are people that are existing clients. There are some new ones, for sure. But at least this is I only have a day and a half as a sample size. But these are people, these are existing clients that some of them I haven't talked to in years. And, they're now past that point of, I think even the most diehard gold bulls and silver bulls have had their resolve tested over the last several years. Did I make the wrong decision? And that's how good these banks are at suppressing the price and controlling the narrative. And this is how good the media is, and or not. I mean, maybe it's not good. Maybe they're trying hard to keep the facade going. And I think what we saw was a reawakening. I knew it. I should have just trusted my gut. That's what we're seeing. And it's a great question. So although it's only a day and a half, I would say the majority of all of the business has been from existing clients who are reemerging and very concerned at what they see. So these are knowledgeable people, mind you. These are people who understand what you and I talk about. You don't have to have a degree from Wharton and work on Wall Street like you did to understand that things are freaky. And these people who have been at it for a long time, I think, are this is reconfirming all the years worth of suspicion that they've maintained.
So have they been going into silver primarily or gold, or what's the balance been like in terms
it's been as before. The majority has been in silver. I will say there's been a large amount in gold too, because there have been some very large orders. But I would say 80+% silver, and and a good amount of gold eagles and buffaloes mostly. So yeah, still mostly favoring silver. And how can you not? I mean, how can you not? In a world where asset prices have been so distorted for so long to the upside, I mean, silver has been distorted to the downside. And you look at the commitment of trade, or the positioning rather, of everyone on the exchange. Silver has the largest concentrated position of anybody on the exchange. They put more effort into holding down silver than anything. And how can you not see that? And I think a lot of people who've been at this for a long time do see that and are doubling down on silver, because they know that there's nothing that offers that kind of value, while at the same time, in my mind, being a very conservative play. So mostly silver, but a good amount of gold too.
Okay, and you were saying that so far the premiums have not changed at all with what we've seen in the last day or two?
A little bit. Yes, a little bit. Not a lot. And they changed primarily from Friday to Monday. And the reason they changed from Friday to Monday was because I think there was a lot of fear, even in this industry, what the market was going to open up to. And we were doing a ton of business over the weekend, because when all of this happened, there was a lot of people buying over the weekend. But the increase in premium, maybe 50, 60 cents on silver coins, but not what you would think. I'm surprised that the premiums haven't really taken off yet. They did go up over the weekend because of the uncertainty. You see, the metals market is open 24/7. It circles the globe, except from roughly 6 o'clock Eastern Friday to 6 o'clock Eastern Sunday. And that's that period where the market sleeps. So, if you're taking all of these orders, we can go long, which we usually do, into the weekend. We buy contracts so that we can sell, so we're not selling, exposing ourselves to the market if we sell over the weekend. But you can't hedge that premium. So the dealers did, the big dealers, the primary distributors did bump premiums up a little bit, but not a lot. Certainly nowhere near what it's been. And I'm surprised we didn't get premiums jacked up here today. So again, small sample size, but no, the premiums have not come up yet. If it continues like this, they most certainly will, because this is pretty much the most voracious demand I may have ever seen in a 24-hour period, maybe even greater than silver in terms of volume. So yeah, it's right up there with the craziest that I've ever seen.
Yeah, I could imagine. And I guess something we were talking about, we had Vince Lancy on the show today, and we were discussing whether this is something that now that the Fed and the FDIC and Treasury have papered over the situation for now, do things calm down, go back to normal in a week or two, everyone's forgotten about this, or do things stay elevated? Obviously, I guess there's arguments to be made for both directions, and we'll see what happens. But what I am wondering, and again, we'll preface this that this is a guess. How many days of today's type activity would it have to take before there would be issues in terms of availability? Is it would take weeks of activity like this? If it stays like this for the rest of the week, then you run into issues, or just
I
to
think
give
it
people
could
a
be,
gauge of
yes,
how
a
long
week.
that would be before you get back to something like what we saw in October and November.
See, the difference between this and Silver Squeeze and what we've seen is that all of this has been, I mean, Silver Squeeze was a whole bunch of people coming in at once. And the last couple of years has been distortions in the supply chain. What this is an awakening by the public. You add into Missouri and Idaho and Kansas and Wyoming and all of these states that are introducing gold and silver legislation and using it as legal tender for debts, public and private, and they're pushing it on the awakening of it to their citizenry on top of a 10-year treasury market that fell by 16% last year, the biggest in history, and the S&P down 20%. And people are already on edge. And now the banks. So what you're going to get, I think, for the very first time, and it hasn't happened yet, to your earlier question, is an awakening by the public. And as I've often said on your show, 0.5% allocation across the entire financial matrix in this country to precious metals, if that goes to 5%, which would be woefully inadequate, and that's ironically what financial advisors would say: never buy more than 5% gold and silver. Instead, you should be invested in overvalued stocks, bonds, and real estate and dollars, but never more than 5%. But just a 5% allocation, which is crap, would represent a fold increase in demand, and bang, it's gone just like that. So I don't know. I mean, what is it going to take for people to wake up? What is it going to take for people to realize that the road to retirement is not only paved with dollars and mutual funds and stocks? That's the real question. And does it take another bank like Credit Suisse failing? How many banks are being liquefied behind the scenes right now to stave off what would be catastrophe? What is happening to the value of the dollar? How much of this can we take, and how much of it will be reported? How much of it will people finally grasp onto? So it could be a slow drain because people are still anesthetized and sleeping, or maybe there's a broad awakening. Or God forbid, we don't see an event where Japan and China start to shed all of their 2 trillion in treasuries. And we see interest rates go up, way up, not the 25 and 50 basis point pussyfooting that is putting strain on the banking sector. What happens if rates go up 10 points because bonds are dumped globally? If that happens, you will see exactly how frail this banking system really is. And the Fed will not be able to backstop everyone. They will destroy the dollar. It will become Weimar Republic. So I can't answer that question other than to say, if things continue down this fraudulent, illusionary path, then it might be longer than we would think. But an awakening is happening in Missouri and Wyoming and Idaho and Kansas and Tennessee and Mississippi. All of these states that are waking up are proving this. And, pretty soon they're going to be calling you to be on Fox News and on CNBC instead of this idiot Jim Cramer, who ought to be fired and thrown in jail for what he's done, telling people that stock was undervalued at $300 a share. I mean, wake up, everyone. It's getting real. And I think the banking crisis is upon us. And there's only so much the Fed can do. They're sticking fingers in every single hole of the dike. And at some point, you run out of fingers and toes.
Whack-a-mole, as Professor Lancy referred to it earlier today. And speaking of the Fed, it'll be interesting to see what happens at that March 22nd meeting. So a week from Wednesday. we've gone from talk about 50 basis point hikes to Goldman Sachs and others suggesting that they will actually pause at next week's meeting, which I think would be rather interesting to imagine what effect that would have on the metals if you get the pause a lot sooner than people were imagining, even as recently as a week ago. So,
And not only that, that pause, why pause? Because it shows if we don't, there's going to be chaos. And if you're an adversary of the US, don't you just see how ripe they are to take advantage of that? That they are in a very, very compromised position. On one hand, you destroy the dollar. On the other hand, you blow up the banking system and the economy. What do? And by pausing only goes to show that they will do what every other government has ever done since the beginning of time and choose austerity over the tough decisions. But the problem is they've printed so much damn money and created so many distortions that at some point they've gone too far. And you could argue we're already there, at least in terms of the rest of the world and this cohesion of countries around the world de-dollarizing in preparation for exactly this. They see this. The people here in this country, they don't get it. They don't see it. They work too hard every day just to make ends meet. And you know, the gal I think who took over for this for the I won't even go down that road. I don't want to go down that road with you, but let's just simply say this: we're focused on the wrong things, and the rest of the world sees it, and we're ripe for the picking. And to see countries rapidly shed dollars and shed treasuries and only add to the pain that we are in right now, I think is in the playbook. So I will simply say this one more time: get your gold and silver while you can. It is not an investment. It is wealth that has lived through everything the world has ever thrown at it. And this is another thing that when the dust settles, he or she who loses least in this environment wins. We're all going to lose, but he or she who loses least wins. And I would just simply leave it with that, because I think in this environment, that's the kind of path we're heading down.
yeah, well, I get what you're saying. And certainly this morning, as I was taking Nibbles out for a walk, and there was part of me that sees some of this stuff, and it's kind of scary.
Yeah, it
Where,
is.
obviously we talk about silver, hope silver does well financially and all that, but certainly as you see some of these things that we have speculated about for a long time, definitely very disconcerting out there. And just hope people are doing okay and figuring out the ways to best navigate all of these things, and sending well wishes to everyone out there, because at least to me it's a bit disconcerting when you actually see the stuff finally coming. And anyway, with that said, any final thoughts before we wrap up today, Andy? Anything else people?
No, you know what? I just think that this is a deal that that's not going away. So if, like you said earlier, this gets papered over and a week goes by and people just forget, that's kind of the MO of this country. You know, it's short-term thinking, which is, I think, penny wise and pound foolish. I think you just need to realize that this is just the very, very beginning. And I think that the best place to put your money, and I think about this every day because I do all these podcasts, and you know, you're my friend. You're not just someone I come on the show with, and I'm speaking to you as a friend. I think about this all the time. It weighs on me. Am I giving people the right decision? And then I think, if someone gave me a $20 million bill, what would I do with it? And I can't think of any place I'd put it other than gold and silver. Maybe a farm. I don't know how to farm, but you know, where we're going, maybe that's the place to be. I don't know. But other than that, I don't know where else to put it. And I think I'd love to hear people come back and in the notes, in the comments, where else do you put your money, right? Where do you put it where you will sleep well at night? So that's all I got for you, brother. I love you like a brother, and keep doing what you're doing. It's never been more important for you to keep at this right now. And I'm honored tremendously to be here each week. And anyone who reaches out to us at Arcadia Miles Franklin, we will treat like family. And I know Yara will as well. And I'm honored to be part of what you're doing at this time in the world where we need people like you to stand up and tell the truth, because most people have no idea what's about to barrel down upon them. And I think this was just the tip of the iceberg. So I guess only time will tell, but look forward to picking up where we left off next week and see what happened in a period of a week.
Well, I hear you. Go get some rest, and we'll see what happens going forward. But appreciate you making some time on a busy day, and we will catch up with you again next week. Well, thank you to Andy for that recap of what is going on in the physical silver and gold market. Certainly not entirely surprising given what we've seen happen over the last couple of days and seeing a bank run and really a bank unravel so quickly, which again is a bit shocking. But the type of thing that people were concerned about when the Fed started raising interest rates as rapidly as it did. And be interesting to see what happens at that meeting next week on March 22nd when the Fed meets again. So we will keep you up to date and posted on what happens in between now and then. Though before we wrap up, I did want to thank BlackRock Silver for bringing us today's episode of the show. As I had mentioned a few weeks ago, BlackRock is getting the permitting in place to do a follow-up drilling program at their Silver Cloud project. They did have that big intercept that they got back from Silver Cloud. Came in at 52.62 grams per ton gold. And after doing a metallic screen gold assay, they had results that returned 70 grams per ton gold. So they're getting ready to do some further drilling on that. As they get the permitting in place, they have plans for a 4,000 meter drill program, test approximately 500 meters of strike along the vein, as well as the down dip potential. Of course, that is in addition to BlackRock's Tonopah West project and their lithium success that they have now partnered with Tierlock Resources to do the further development on. So quite a bit going on with BlackRock Silver. I'll have the link to this press release in the description field below. And as always, appreciate you watching and thanks for checking in, and we will see you again tomorrow.